is the Thursday edition of MyStockScanner Live. With me, Liam Flavelle and Hans-Henrik Nielsen, as always. We boil market noise down to clear signals and three simple questions. Does the stock have a quality? Does it have an upside? And is the timing right? And Hans-Henrik, let's look at the market right now. Danish market down by 2.14%, only two stocks barely in green, the rest all red. In our own playbook portfolio, which is down by 0.9%, still beating the market slightly, even though that we're down that much. We had three sells and one buy. Why are we not heading for the exit?
Oh, that we might be that if our stop losses are being hit. But from experience, we can tell that trying to guess when the market is going to crash is a fool's game.
It's a fool's game. But the three fools here are going to entertain you for the next 25 minutes. And Liam Flavelle, one of the big numbers came out last night on the American market, and that was MICRON. A heavy anticipated numbers. They were stellar, and yet another drop for a stellar company. What happened?
Yeah, dropped 5% after market. We see this a lot in in this day and age where everything's priced for perfection. People are looking at it thinking, okay, I've played the earnings season and earnings numbers are out, so I'm going to sell now. That's probably what happened.
A lot of profit taking going on. People are hedging their bets and making sure they have cash in their account. Also, if it takes a dip, there's going to be loads of buying opportunities. Once again, welcome to MyStockScanner Live, where we try to cut out the noise and focus on strong businesses, clear upside, and timing that matters. Pressure bills on NOVO. Bernstein initiated coverage of the stock maybe half a year ago, and now they say it's underperform rating and cuts their sort of number to 175. We're going to talk about that in a minute. On the macro fund, central banks are holding steady, the Fed's Bank of Japan. And what is Europe going to do this afternoon? Hans-Henrik will talk about that in a minute. And at the same time, we're seeing a widening gap in oil prices between US and Europe. Why is that? Why is oil so much more expensive in Europe than in the US right now? And gold is slipping yet again. And in tech, it's Tech Tuesday or Thursday. Liam Flavelle, of course, talks more about MICRON, but we're also going to take a look at HSBC that have major job cuts driven by AI. And Alibaba, the cloud business, and that's part of their business, came with numbers just minutes ago. And a major boost in defense spending gives RTX an 8.4 billion contract. We're going to talk about that. First, today's number of the day, 1100%. We will tell you what that's about. But let's start with the tech side of business. MICRON came with numbers, as Liam just said. Good numbers, and yet they fell a little bit. Take us into the numbers and also tell more about MICRON, because it is one of those companies that is an important, super important company in the AI business.
It's a massively important company because they provide the memory that goes into the AI data centers, into the PCs, into laptops, into phones, and things like that. So they're pretty much everywhere in the ecosystem. And MICRON is one of the top three providers of memory products across the world. From the numbers that came out yesterday, I think they trebled the amount of revenue they had in over the last year. So massive growth, and you can really see that in the valuations on the stock itself. So, I mean, from a 3-point playbook perspective, the question one is, a big tick in the box. It's yes, a very good, very high quality company. Is there upside? I mean, the stock's up, I think I worked out, over 600% in the last 8 months, 10 months. And the surprising answer to is there any upside is yes, probably quite a lot from our point of view. I don't actually know what the analysts are drinking or smoking or whatever out there, because they see not an awful lot of price upside here. But what we're effectively looking at is that investors have been prepared to pay these levels at the lowest level, a PE of 15, which for a growth tech company where their product's going to be constrained for the next 3 to 4 years is absolutely insane, and growing EPS. So, we have the minimum that we'd get if we stayed invested in the stock for a year and a half to 75%, and it could even go up another 150%, something like that. That's sort of difficult to really look at. But when we look at the worst case scenario and think the worst case is actually a positive 75% in according to numbers, then great. the stock was down, so it's going to open down around 440, something like that. Will it go up? Probably. At the end of the day, the things that are driving this stock are there just isn't enough memory out there for the next. And SK Hynix come out yesterday saying there's not going to be enough memory being produced for another 4 years, 3.5, 4 years. Therefore, the opportunity is for MICRON to massively increase its prices, massively increase its amount that it sells, and hopefully give us investors massive sort of price rises.
And we've seen it from SanDisk and Western Digital as well, that the prices just keep going up.
Yeah, and SanDisk is a good example. The cloud is actually moving more into their neck of the woods, which is storage and hard disks and things like that, or SSDs as they are now. So the AI is moving sort of a lot of the hard disks really, really close to the CPUs and GPUs that are used in the data centers. So they're seeing massive gains. But the SK Hynixes, the Samsungs and the Microns of this world with traditional memory are going to have a bit of a party for the next couple of years.
I'm going to keep Hans-Henrik on the red light like a Formula One racer right now, because I can see his face is turning red now, but we will get to him. But I'm going to ask you a quick question in regards to Alibaba, because they just came numbers, and they're a little bit of a tech company as well.
Yeah, I think they were in damage control mode yesterday. They came out and said that they were actually increasing the prices of their AI offerings because of a huge surge in demand in China, and I think that was mainly to offset their numbers. So they came out with numbers today. They're about 66% down on revenues compared to last year, which is a big number. It was sort of expected, but the market has reacted with around a 5% drop, bit like MICRON in here. If I just go to here, so they're gonna open up down here. It looks like there's a floor here at the moment, so the stock may bounce. From a quality point of view, it's a really good quality company. It's 85 earnings per share is looking like it's going up after sort of a bit of a drop. Regular listeners and viewers will know we don't like this, and this is why we stay away from it, because there's so much uncertainty. But it looks like the upside is going to come in for Alibaba. Would we buy now? No, because the stock is below the 50, the MTIs are red, so we'd wait until these two lines go green at the bottom and we get above the 50-day SMA. That's when we'd be interested.
Okay, let him rev, because he's ready. Hans-Henrik, we're looking at, after it happened yesterday, what Powell was saying. Of course, everybody knew that he was not going to touch the interest rate, Hans-Henrik. That was certain. But the wording, what he said, and you said he spoke big words, even though that he has a very mellow voice.
Oh yes, I am pretty sure if an outsider had listened to it, they're fallen asleep. But those of us that listen to it a lot, he was actually quite. There were some quite profound things in there, because he basically said we are not going to see an interest rate cut anywhere soon. Anytime soon, and that we could see that in the market straight away, because we have this website. Not we have, but there's this website called FOMC Countdown, and in here you can see there's 41 days to the next Fed meeting, and all of a sudden we actually have. Let's just have a look at the April meeting. This is the pricing in something called the swap market that dictates what probability there is for different interest rates. And this one says that at the next meeting, there's not going to be cut any rates here. Actually, there is a little probability for a rate hike. And if we go to December, it's actually still the majority that thinks there's even the same rate as now, or a bit higher rate. That is quite profound. Also, he said right now the inflation is 1% higher than it ought to be. They're like 2%. And he said 3/4 of that, meaning 0.75% in the extra inflation, is due to the tariff war. And we did talk about yesterday, will he just send a little teasing message to Trump in one of the last meetings here? And I think if there was one, this was the one. He said, Trump, you caused this.
And also, we know Bank of Japan is not going to move their interest rate. Europe comes up, they're next at bat, and we're not expecting anything from Europe either. Is that right?
Yeah, absolutely. We have a bit of the same here called ECB Watch, a fairly new website where we can see there's a slight probability of a rate hike today when there's a rate meeting. But looking into December meeting, there's actually anywhere from 1 to 4 hikes that people think is probable. There's absolutely no rate cut. So are you sitting on a flexible loan rate thing in your house or whatever? Well, you need to consider this.
That's absolutely what we do, and Hans-Henrik does this every morning. He takes the helicopter view at the market scan. It comes out just before 9 on our webpage, and you have the privilege of reading that and getting these informations ahead of the market. Something that also, Hans-Henrik, I'm going to keep you at bat here, is going like a roller coaster. We see it right here. That's the oil prices. Nothing new about the prices going up and down right now, and of course, mostly up. The difference that we are noticing is between the US and the EU. It's gapping up. What's happening?
Yeah, the oil is actually both going up and down at the same time right now. But that is because there is 2 different oil markets, or there are many. But the 2 main ones we are normally looking at, and many investors are looking at, is the one called the WTI, Western Texas something here, the crude oil. That is the US version, and then there is the Brent crude, the UK version. So there's a European and a US version. And as you can see, the UK, the Brent, normally is a bit higher priced. There's a spread there, but just lately that have been gone completely crazy. And one of the reasons is that Europe we are the ones that are being hit the most, at least in the Western world, from this war, this blockade of the Strait of Hormuz. And US right now, of course, the companies want to export some oil, but the price of actually shipping oil around the world have tripled. And then we have not even counted the extra insurance cost. So right now, some of them are actually holding it back in US, which means there's a bit more of a surplus in oil in US, which lowers the prices.
And also, it gives Trump a squeeze in Europe at the moment, which
Definitely
is not.
does.
And who knows if he could come up with an idea of doing that? Oh, such a bad guy!
Yeah,
Isn't he?
let me just quickly on that note that, of course, they are already out saying that means Europe should just help US in the Strait of Hormuz. The fact is, US is being hit by this as well, because if he sends the entire rest of the world into recession, there'll be a lot less buyers of US products, and the products that are being sent to US will be a lot more expensive. So there is just a delay.
Yeah, and now we're going to talk this shining metal, Liam, quickly in regards to gold. The thing is, prices is going down. I thought everybody was rushing to save even. It's not gold.
Not necessarily, and we often see this in times of crisis where everyone they want the best store of value for their money, and that at the moment is US dollar. That's always the initial knee-jerk reaction. Crisis has happened, right? Get into dollars because that's the safest place for you. They can, that's where the reserve currency is. So we see this quite a lot. Gold has dropped, and we dropped 5% yesterday, something like 5.5%. No, that's today, and around 2.5%, something like that yesterday. It's going down. There are also inflation aspects to what we're talking about. Just a quick note: we came out of our last gold stock. It was around this level, something like that, a couple of days ago, because it broke our 50-day and it's just carried on plunging down. So it's a good time to get out. We got out with, I think it was 27% profit. So we've ridden the wave quite well. We're ready to go into it again, but we're going to wait for gold to go up and inflation maybe to rear its head.
And there's no doubt that it's broad. It's all the mining stocks going down. Everything is being hit at the moment.
It is, and when you look at it, you look at gold at $5,000. It was getting to be speculative. Same as silver. That was speculation pushing those prices up, as well as some imbalances in the market. So that's and I think you're seeing a lot of people take profits now out of that speculative phase, and is sort of going back to where maybe it should be. You never know.
where it should be. The question is, where should NOVO be? Because Bernstein, the analytics, took a look at it, and Hans-Henrik, surprise, they said NOVO should be at, I don't know what happened there. We got changed around on screens here. We're going to go back.
Oh, I like it. I like it. I think
You
it's.
like
I
that?
think it's
I
right.
bet.
Yeah.
Yeah. No, center of attention, of course. But anyway, it's because we're talking NOVO. Hans-Henrik, 175 kroners for Novo Nordisk stock. Ouch. That can't be right.
Yeah, it is that Bernstein analyst that comes out saying that. And for those of us, those that have followed us for a while knows that we basically never listen to these big analysts. They are shifting their targets. Normally when prices are going really quickly down, they are just lowering their targets. And when they go up, they're raising the targets. I wouldn't recommend anyone, not retail traders, at least using it. We sold our NOVO stocks back. Oh, I can't even get a bag up here at around the 900. We had a quick position. I think it was down here that we came out of quickly, and then we have basically noticed that there are these 25% moves down, and then it goes sideways for a while. And when it broke down here, we said, well, it might actually go down to 210.12-ish. It's not something that we have as a target because we're not planning on buying NOVO as long as it's in a downtrend. What Bernstein is saying is 175, and I wouldn't take that serious. I have no clue what they base it on. It could go to 175.
The fact that they're short in NOVO at the moment, maybe.
Yeah, there might be something there, but allegedly, we have no idea. So, but there's a lot going on, and yeah, should it cost 175? I don't know. There was a lot of people that laughed at us when it broke down here, and we said, well, it might go to 400. And they said, are you absolutely insane? Now it's at 236, and who knows where the bottom is.
Liam, we're going to shift focus back to you, also because this company is a big name on the British market. It's a big bank all over the world, HSBC. They came out with a story this morning, which was kind of weird because they were considering cutting up to 20,000 jobs. That's not nice to be an employee in the company and say, we're considering cutting 10% of our employees.
No, and it's probably going to be the tip of the iceberg in the next few months or so, I'd guess, on this. So a lot of companies are saying this, and actually HSBC have said it's because of AI. And they're cutting 10% of their global workforce. A number of companies have done this. Amazon did it in October, November, and then Jassy had to come out and say, well, okay, it's not really AI. We just had too many staff. I think we'll probably find the same with HSBC. Undoubtedly, companies are bringing in AI into the focus and getting more, more economies of scale because of it. But I don't think we're quite there. I don't think all of those will be AI firings, as it were. From a stock point of view, just very quickly, I was looking at this earlier on. It's a really, really good stock. I mean, it must be because it's British, so we know they're going to be good quality. But purely, you can see a whole load of green. The returns on capital tend to be a little bit red sometimes with banks because of the way they manage their balance sheets. But very, very good quality. And from an earnings perspective, if we match up the recent lows and highs, if we bought it and held it to the end of next year, we're looking at still a positive to just about break even, and potentially in our base case a 50% upside of what we think could happen if it carries on this trajectory. And I've actually put it a bit low there. The issue is the stock at the moment is just sort of just dipped below the 50-day moving average here, this green line, and the MTIs are red. So we wouldn't buy at the moment, but it wouldn't take too much for it to come up, bounce, and then it might be on our radar.
Who knows? Keep your attention here. We will be updating you on this. We broadcast 5 days a week, twice in English. That's Tuesdays and Thursdays at 1 o'clock. So if you want to know more, just keep it the dial right here and you will know more about it. We have to take a look at some defense stocks because Hans-Henrik, this stock we talked about yesterday, and we were close to buying it. That we have to disclose, of course, because of what's going on in the Middle East, because of Ukraine. What they are selling is simply missiles and missile defense as well. RTX, fine stock, just got a new contract, $8.4 billion. Isn't it worth just buying the stock on that?
Yeah, well, we never buy stock on news like that, but there's no doubt that it's a good stock. Also, Pentagon just went to the White House and said, "Oh, by the way, that silly little war you're running right now, we could really use $200 billion extra on top of the 1,000 billion we're using before this." That tells me that they are probably not counting on this war ending anytime soon. If they expected it to end next week, they would probably not ask for 200 billion, or well, maybe they would. Who knows? But Raytheon here. It's a good company, really good quality company. The quality score 78, earnings per share going up, revenue going up, low PEG ratio, analyst loves it. The return on capital is going up. Free cash flow is through the roof, almost at least. They can pay interest on the debt. Really, really good. The thing we mentioned yesterday is that it's hovering around the upside of this value channel here, but it has been doing so since it costed below 100. And now it has doubled. So right now, in the current situation with Raytheon producing both the Tomahawk missiles and the interceptors for the entire Middle East that they normally produce, is at 60 or 80 of per year, and now they up it to 1,000. And opening up a new factory that they had in spare. So they actually seems to have the capacity to run a lot more missiles through. So I know this sounds really cynical, but it actually is a good play in the defense of, I don't know if you can call this defense with Tomahawk missiles, but it's called defense. It doesn't sound as violent then.
And it's one thing that you do every day, Liam, and you is not being mean. That's one thing, but that's against me. But that's another story. But the thing is that you're looking out over the market and you're trying to find opportunities in any market. It could be a down spiral market or an upgoing market. You always try to find the alternative. And I'm going to present you one. And I know that you're going to laugh because 1,100% up is nothing in this market. But these small drones went up by 1,100%. Whole new company had IPO the other day. Now they're up 1,100. Guys, where were you? Why didn't we buy it? Liam?
Because we've got no idea what the history is, what investors have been prepared to pay for it. I mean, it's a sea of green there, isn't it? Look at it. We invest in boring companies. We've got a good chance of knowing where investors are paid at the top and where investors have bounced and decided to go back into it. With Starmer, we probably need a few more days than 2 to actually decide when investors like them and when they don't.
Also,
you call them Starmer. That's because of your prime minister.
They're
called
Sorry, I was just about to fall asleep, and then I said
he's high flying as well.
Yeah.
The pre-market right now sits at just around 46. So the ones that bought in at the exact top here yesterday is now in minus 28%. There is a risk of meddling with these IPOs. They could go up 1,000% more. They could go to $1. No one knows.
It is number of the day, 1,100% is what they're up since their IPO. What a mismatch in price it was. Questions from you to us are welcome in the Danish show tonight in the live Q&A. Liam and I had the show on Tuesday night at 7 o'clock. Tonight, Thursday at 7 o'clock, it's Hans-Henrik and I. If you have a question for us, FOMO@MyStockScanner.com. FOMO@MyStockScanner.com. That is the question. We're almost at the end of the show for today. We have a few sort of numbers coming our way in regards to earnings. Darden Restaurants, which is a big chain-owning restaurant company in the US, 2,100 restaurants. Olive Garden is one of them, are coming with earnings, and FedEx is coming with earnings. And Liam, when it comes to FedEx, the interesting part of that is that it's about shipping goods around in the US.
Yeah.
So we get to see how goods are moving. If they're low, FedEx, goods are not moving.
I'm more looking at their guidance, actually, with the aviation fuel just going up in a huge amount. I've seen just several reports of other parcel companies that are starting to really bleed, and FedEx are always a bellwether for the global economy. So that's what I'm looking at personally.
Hans-Henrik, on Friday, tomorrow, there will be new additions to the S&P 500 in the US. That has been signaled out long time ago, but it always gives the stocks, or sometimes gives the stocks, a little bump.
Yes, definitely. It is. It gets into focus, and also all the ETFs that are covering S&P 500, and that is the largest ETFs in the world. They all have to mirror the S&P 500. So the second a new addition is getting in there, even though it's a small one, they have to pour X amount of million of dollars into it. And that normally gives it a bump. In the beginning, it was when no one had noticed this, it was really big. And now it has become smaller and smaller, the bump, because everyone is trying to anticipate what is the next one. So they actually go up in advance. And that is how it is in the market. If there is an edge and it gets well known in broadly in the market, it starts to wane out a bit because people know.
But what if you leave the market then? What if you're taken out of the S&P 500? Does that mean that people are going out selling off the stocks?
Yes, that is the other effect of that. All of a sudden, the ETFs don't want to have it, or they're not. They shouldn't have it because they want to cover the S&P 500, so they're selling that off. But it is the smallest stocks normally, some of the smallest, that gets in or out. So it's maybe 0.4% of the portfolio, but it is a lot of millions of dollars moving around.
And as said, that's what these guys do each and every day. Liam Flavelle, Hans-Henrik Nielsen, keeping an eye out on stuff like that, kind of calculating, try to calculate it into the stock prices. And if something moves, they definitely know it, and they'll try communicating it to us here on the show. That's Thursday's scan is complete. You're one step ahead heading into Friday on quality, upside, and timing. Liam Flavelle already published the Thursday tech article on the various platforms. You get to read in depth about MICRON and other tech stocks, and he will be back live on air on Tuesday at 1 o'clock in the afternoon. That's when we have our British shows. Danish show tomorrow at noon, as always. And remember our webinar, our Q&A webinar tonight at 7, FOMO at MyStockScanner.com. That's the email that you should use if you have any questions for us. Gents, always a pleasure. See you next week, Liam and Hans-Henrik. I'll see you tonight and tomorrow at noon. Happy investing out there.